So let's talk about Meta, the company behind Facebook, Instagram, WhatsApp, and that massive bet on the metaverse. Today, we're going to pop the hood and take a deep dive into their financials to see what really makes this tech giant tick. It's a really interesting question, right? You've got this absolute cash machine on one side and this giant futuristic gamble on the other. So we're going to walk through their numbers step by step to figure out if the business is actually getting stronger. And of course, just a heads up, this is all for educational purposes. We're not giving out any financial advice here. Okay, so here's our game plan. We'll start with where the money comes from. Then we'll check out their profits versus their big bets. We'll peek at their balance sheet, see how they're spending their cash, look at the growth picture, and then wrap it all up with the good, the bad, and the future. All right, first things first. To get a handle on Meta, you've got to know where the cash is coming from. Let's break it down. For a company this complex, its money-making model is shockingly simple. I mean, look at this. Nearly everything, a whopping 98%, comes from one single source: advertising. It's an absolute behemoth in the ad world. And the scale of that ad machine is just staggering. You can see there was this little dip in 2022, which was a pretty big deal at the time, but wow, did they bounce back? The growth just exploded again, which really tells you how powerful and resilient their core business is. But here's where it gets interesting. That revenue, it's really a tale of two completely different businesses living under one roof. On one side, you've got the family of apps. That's your Facebook, your Instagram. That's the profit engine, the golden goose. And on the other side, you've got Reality Labs. This is the big, bold, and incredibly expensive gamble on the future. Okay, so we know they're bringing in a ton of money. The big question is, how much of that are they actually keeping? To figure that out, we're going to look at something called operating margin. It's a really useful metric. Basically, it tells you how much profit a company makes from each dollar of sales after paying for all the day-to-day costs of running the business. The higher, the better. And this chart, man, it just lays bare that internal conflicts at Meta. The family of apps, it's a money-printing machine, just churning out billions in profit. But then you look at Reality Labs, and it's a giant hole that's burning through billions of dollars every single year. It's a classic story of profit versus investment. And we're not talking about a small investment here. The spending on the metaverse is so huge that it's a major drag on the entire company's bottom line. Think about it this way. The super profitable ad business is basically footing the bill for this massive, futuristic gamble. And it's a gamble that's still very, very far from paying off. Okay, so profitability is important, for sure. But what about the foundation of the house? Is it built on solid rock or on sand? To find out, we need to check out Meta's balance sheet. The balance sheet is basically a financial snapshot. It's like taking a picture that shows you everything the company owns, its assets, and everything it owes, its liabilities, at one specific point in time. And when you look at Meta's balance sheet, the first thing that just jumps off the page is the cash. We're talking about a mountain of cash. Having that kind of money just sitting there gives them incredible power. The power to survive downturns, to buy other companies, or to pour into huge projects. And this chart really drives the point home. Look at that huge bar for cash compared to the tiny one for debt. Meta is sitting on what's called a net cash position, which is incredibly strong. This is their fortress. It's what allows them to make these massive, long-shot bets like the metaverse without blinking. So you've got this fortress of cash. What do you do with it all? Well, how Meta chooses to spend its money tells us a whole lot about their priorities. First, we need to understand a term called free cash flow, or FCF. The easiest way to think about it is like your own paycheck. After all your bills are paid and you've set aside money for essentials, what's left over is your free cash. For a company, it's the cash left over after paying for operations and big investments, like building new data centers. It's the real cash they can use for pretty much anything they want. So where does all that free cash flow go? For Meta, it's mainly two places. A huge chunk gets plowed right back into the business. We're talking massive spending on data centers and especially AI. The other big thing they do is buy back their own stock, which is a way to return value to investors. And notice what's missing? For a long time, no dividends. They prefer to keep that cash to either reinvest or do buybacks. All right, let's switch gears and talk about growth. We'll also touch on a few key numbers investors look at to get a feel for the company's valuation. This chart is pretty incredible, isn't it? Remember that 2022 dip we talked about? Well, look at the comeback. They didn't just recover, they shot back up with really strong double-digit growth. If you ever needed proof of how durable their ad business is, this is it. Now, how do you even begin to value a company this massive? Well, investors often use quick shorthand tools called ratios. You'll hear about the PE ratio a lot, that's price to earnings, and there's the PS ratio or price to sales. These aren't magic numbers that tell you buy or sell, but they're super helpful for comparing a company to its peers or to where it's been in the past. Okay, we've gone through a lot of numbers. Let's step back and put it all together. What are the big strengths and what are the major risks? So in the strengths column, you've got that absolute dominance in advertising and a user base that's just massive. It's a free cash flow machine, and it's all sitting on top of that fortress balance sheet. But, and this is a big but, the risks are just as huge. You've got constant regulatory pressure, fierce competition from players like TikTok, major headwinds from things like Apple's privacy changes, and the elephant in the room, that multi-billion-dollar bet on the metaverse, which is still a giant question mark. And that really brings us right back to where we started. Meta has this incredibly powerful, profitable business today that gives it the money and the freedom to chase a wild sci-fi vision for tomorrow. But will that vision ever become a reality? That is the multi-billion, maybe even trillion-dollar question.